Okay guys, welcome to the Ichimoku system for beginners. This is for people that have never seen the Ichimoku or don't fully understand it because people make it more complicated than it really needs to be. It's not a complicated system, but if you look at it, it looks like a bunch of spaghetti lines, going all over the place. The system was designed back in the 1930s by this Japanese guy, and he took him years to develop. And even after he got it up and running, he took him like almost 20 years before he let the public, start seeing it. And Ichimoku, full name really is Ichimoku Kinko Hyo. And what it means is the Ichimoku means one glance, Kinko means equilibrium or balance, and Hyo means chart. So he can, at one glance, see the balance of the chart and know if he wants to stay in it or if he wants to move on to another chart. It's that quick because it shows you right now in front of you, it's actually showing you the momentum of the stock, the support and resistance, the entry and exit signals, your stop losses, your trend direction, your market bias. It's giving it to you all in seconds. And you can see if you want to stay in there or not. So as of right now, it might look kind of weird. But at the end of the video, we're going to come back to this and you're going to tell me what you see. So we're going to get rid of everything and we're going to start with just the very first one. And here's all cleaned up. And we're going to see how we break this thing down. The light blue one is your tenkan. And the tenkan is kind of like your short-term momentum of the market. And the way it's designed is it grabs the highest high candle and the lowest low candle and within the last 9 candles and divides it by 2 and puts it in the middle. So particularly this is just showing the middle between the last 9 candles. And it's really your trigger line. It really kind of makes you know if the market's going up, is it going down, or is it just flat? It moves very quickly. Okay, so now we work together with the kijun, which is the next one. We'll add them in here. And this is your the dark blue one is the kijun, and it's the same thing as the light blue one, but it does it with 26 candles. So it grabs the highest high, lowest low, divides it in 2. So it kind of smooths out the market, and it's more of your medium range of the stock. And the way it's designed, it kind of gives you, if the light blue is underneath the dark blue, that means you are going down in a bearish direction. And when it crosses above, you're in a bullish direction. So that's how your signals work. And when they cross, it's called a TK cross. Tenkan-sen, Kijun-sen, TK for short. And it kind of lets you know that the direction that it was once going, it might be turning around on you. Okay. Now we're going to add the third component, which is the cloud. The cloud has 2 parts, A and B. And I'm going to do that one first here so you can see it. A and B stands for practically is when the A, which is for me is green, is underneath the red, you are in a bearish direction. But when it crosses over where the green is above, you're in a bullish direction. It's kind of hard to look at it like this. You're kind of seeing too many lines. But when you turn it into a cloud, it makes your life a lot easier. See? Now it's a lot easier to look at a cloud. So the cloud is showing you particularly the future. And the way they designed it was the A is just 26 periods forward, where blue is whatever's happening now. Not blue, sorry. The red, the B is 52 periods forward. So it's kind of like it's just giving you a future projection of what the market is doing today. And also, it kind of starts marking your support and resistance lines. The thicker the cloud, the more the resistance or the more the support. The thinner the cloud, easier for the stock to break through. If it breaks through here, for example, it will have to break through this line before hitting this line, might get rejected, bouncing off of this line. So it's kind of like it has more to fight through. When you're in the cloud, people don't like to trade those. They like to kind of like, they call it turbulence. and they kind of stay out of the stock because they don't know which direction it really wants to go. Once it starts showing you above or below, that's when people start trading. Anything above the cloud is considered bullish. Anything below is considered bearish. So when you work these together, if you have a TK cross to the downside below the cloud, you have a strong momentum working its way down. But if you have a TK cross going to the upside in bearish territory below the cloud, then you have a lot more to fight through. And this is why sometimes you don't see the stock moving that fast, because it keeps running into things. It ran into A before running into B, and it got rejected back down. So it's kind of like the cloud letting you know where your support and resistance lines are and what the stock has to fight through to get through. But once it breaks through, it can run. Same thing to the downside. This is a TK cross to the downside. There's nothing there to stop it, so it just keeps running. So when you get these TK cross, you have to figure out if it's below or above the cloud. That's where you get your best runs from them. All right, now we're going to add one more. The last component is the chicken span. The chicken span is the past. And you're saying, well, why do they need that? Well, you're going to find out in a few minutes. It does a lot more than just show the momentum of the market and support and resistance. And it shows you the price now, 26 periods in the past. And it's kind of more of a, since the market likes to repeat itself, when you see, for example, where was I here? I had it marked. Oh, all right here. So for example, you have a stock, it's kind of ranging in here, and it's inside this cloud, and it's breaking out and all this stuff, and it's coming right back. It's showing you, if you mark the highest high right here, and then you mark this lowest low down here, it's showing you that the stock is not going anywhere. It's ranging. So until the chicken span breaks above it and runs, this stock is not going anywhere. This is a lot of times when you hear someone say, well, you got to wait until it gets past the $47 one before you buy, or wait until it gets past a certain price before it goes. It's because you are just playing this game of not knowing which direction the market wants to go. And the stock is not good in a ranging stocks. It loves to trend. It loves when it's running. That's when it gives you all your best signals. So the orange line lets you know if you're inside price action. If you're inside price, nothing there. Also, when it breaks above, if let's say the candles break above it, if the chicken span is still inside the cloud, if it hits that cloud, it could reject it. So even though your stock is above and there's nothing there, because it cycles, the chicken span can hold you back. It can hit a candle and bounce down. It can hit a cloud and bounce down. So until it gets above the prices or above the cloud, there you don't have a free run yet. So from here you look at the stock, if it's going forward in the future or is going backwards. So let's say, for example, I'm trying to clean this up and get away from some lines here to make it cleaner for you. So let's say you're in this stock right here. It broke above 26 period, puts me above right there. So I need to move this forward a little bit. Right there. So you're still seeing some red. All right. So this candle broke above the cloud. You're saying to yourself, oh, should I get in there? Well, the future looks red. Doesn't look good yet. At the same time, if you look 26 period back, now this orange line wouldn't have all this because technically all this has already happened. It would be just right here showing about right here. So it's showing you that it's still fighting. Oh, let me get this these lines out of the way. Come on. It's inside this price action. It has to get above the candles for it to be anything good. Nothing can be in its way. So you have not a good future. You have fighting with the candles, and you have no TK crossover yet. Not until right here, this one, is when it starts to show something for you. So you have a TK crossover right there. So we'll move this forward a little bit. TK crossover, green future, candle still fighting. Looks good to get into it. You're above it. But now you have to figure out how far away is from the kijun. The kijun is where you buy and you sell your stocks. It's really where it kind of gives you your signals of to get out or get in, because the stock always loves to go back to it. So if this, for example, this stock will turn against you, it will have to break through the A, it will have to break through the B, it will have to break through the tenkan, it will have to break through the kijun. So you have all these things that will stop it from falling. If it keeps breaking through, then you know you're in the wrong direction, time to get out. Also, always try to buy closest to the dark blue, the kijun, because this is what makes your stop losses a lot tighter. So if you get in something way down here, if it turns against you, you already know right away that the market didn't work. You buy way up here, you have a long way to go to see if the market's going to turn against you or not, and that kind of gives you a heart attack, especially if you're buying at 56 and you're down 52, you're already down $4 and you're wondering if you're in the wrong trade. It's always better to buy closer to the darker blue, the kijun. Okay. So all your trading signals, you got your TK cross, okay, you got your Kumo twist, green future or red future, you have your chicken not having anything in its way, and once you have everything, all three working together, that's when you know that it's a good buy to get into. Now let's go back to the other chart. When you look at the other one, it's this one. So now when you see this, well, not that, there, you can kind of see at a glance what the market is doing. You can tell that it's definitely very red. It tried to break, but that's really just trying to say that it was in a range, and it's continuing down. And there's nothing in its way of the chicken. The candles are falling. Everything looks bad for this stock right now. So you would just move on to something else. In the next video, I'm going to show you some more advanced stuff that will let you know when it's actually a good time, when this is about to gas out. There's a few signals here that's telling you that this could be the end of this. Alright, so for right now, this is good for the beginning part. If you have any questions, let me know. And keep making some money, guys.